Hey guys, welcome back. In today's video, we are talking about how Citadel needs to pay the junk bond, how shorts are shutting down, and many more in this video. So first, you take a look at this 1 billion capital raise. Citadel LP, the hedge fund manager founded by Ken Griffin, sold $1 billion of high-grade bonds Wednesday to fund the payout to its owners. And so this is exactly what we've been talking about in terms of seeing how Citadel was obviously trying to raise money. You guys can also see Citadel has previously issued debt to fund a distribution. And what we're seeing right now is, I think, a very clear show of how Citadel is trapped with their liquidity. If they're able to be paying out their investors with their own money, they would do so. But right now, their money are trapped in a position where they can't take it out. And that's why in order for them to be paying their investors, they need to sell these bonds, they need to take these loans. And again, we know why their money is obviously trapped up. For those of you guys who are obviously familiar, we've always said this: shorts are trapped, shorts are trapped. And now when you take a look at this, Citadel has their capital tied up in a place. They have not disclosed it. They have not said that they are obviously tied up with their capital. But what we can see with how they're reacting, with the action that they're taking, it does seemingly look like their money's tied up, aka trapped in certain positions. And I think that this is quite a good show of obviously what's happening. We've always been highlighting kind of the liquidity issues, the margin issues that's obviously ongoing with these institutions. And this right now, for me, I think is a kind of a very big confirmation of actually what's happening. You can see this. Citadel has billions in profits this year, but needs to raise capital. What's really going on? In my opinion, all those profits are clients who didn't withdraw are parked to use for collaterals on leveraged short positions. Shorting AMC and GME is tying up more of Citadel's cash, apes winning. And so this is something that, again, we've mentioned in the past. And like I said, you can see biotech, you can see other people, everyone's obviously saying in terms of what's happening in the market. We understand that these short sellers have had their money all tied up. Remember, they need the collaterals, they need the capital to sit there in order for them to still have these positions. One of the things that we know is that obviously not only are shorts creating new synthetic shorts of AMC every single day, but they've also are sitting on a huge pile of existing short positions of AMC. And what this means is that firstly, they need the margin to obviously keep these positions up, but secondly, they need the money to continuously finance these existing positions. And so you guys can see why they need to take these debts, why they need to take these loans, why they need to sell these bonds to free up money, or at least to get money to give back to their investors, especially when they claim that they're obviously making billions of dollars. And now to take a look at this, and this is to understand in terms of what the ratings for the bonds is. $500 million Citadel bonds are just 2 steps above junk bond territory. So we can see that it's triple B bonds in terms of what Citadel has. And what we can see is that it is just slightly above these junk bonds. You guys can see anything that's considered right here are junk bonds. And we are, of course, over here at BBB. And so, this is why we said, why would they need to be selling off these bonds? Why are they trying to put themselves in a bad position for money if they already have a lot of money? I think this is very clear to understand. And I think when you put it in a clear perspective of if you have billions of dollars and you can just give that away without any cost to you, why would you not do so? Why would you be taking up the loans? Why would you be selling the bonds to get these cash? And again, at the cost of something. And so, this is exactly what we are seeing right now. And it's why I've said going into 2025, lots of hedge funds, a lot of institutions are going to be struggling. This isn't the only firm. We've talked about Virtu. We saw how Virtu's financials was going down. We saw how the long-term debt was going up. And so, that was already a clear sign. Now we're sitting with Citadel. We're seeing it with others as well. And this is everything that we have talked about. And it's all starts to come into fruition. Another thing, are they beginning to unwind the FTX tokenized securities now for AMC and GME? Last update was this morning. Choose your favorite currency conversion. So on Coinbase, what we can still see is how these FTX things are still happening. The AMC Entertainment Holdings tokenized FTX, and the fact that they're saying is that it's not tradable on Coinbase, yet you are able to convert it. And this is something that we saw it in the past before, and we are seeing it again now. And so why is it that we are still allowing this? Why are we still able to see it being converted? Why are they trying to gain, more supply of these tokens? Whilst they claim to say that these tokens hold zero value, you guys can see here, 1 AMC equals £0, 1 AMC equals €0, 1 AMC equals $0, etc., etc. We are still seeing it actually existing. And remember, these coins never need to actually hold any value, because if it did, then when we did see that FTX had over 400 million tokens of AMC that was supposedly backed 1-to-1, that would have been an entirely, whole AMC that was right there that they were holding. But that's clearly not the case. And so we've talked about this. These coins do not need to have any tokens. These coins exist purely for the sake for brokers, for institutions to say that we are using this as a locate, we are using this as a proof that it's a share. Therefore, we can borrow these shares and then short it against AMC. And that's why we're still seeing it existing. Now, another thing. We've talked about Citadel, how they're struggling. We've talked about Virtue in the past with how they're struggling. And now we're seeing this. Breaking, short seller Hindenburg Research is shutting down. So going to 2025, this is seemingly the first short seller to be closing down. Now in 2024, we saw many short sellers closing down. We saw the same in 2023. We're seeing the same now in 2025. And so this is exactly going to be kind of what we're going to be witnessing for the next few months. Short sellers are obviously failing to keep up with what they're doing. And remember, we are already seeing why this is happening. The very fact that we are seeing how Citadel is failing to gain access to money, the fact that we're seeing, like I said, all the revenue profit going down for Virtue, but yet the debt is going up. We are already seeing the signs of how these firms who have been manipulating the market have obviously put themselves in a bad position. And again, what does this mean? Well, when you take a look at what they're supposed to be saying, so Citadel obviously is boasting that it's made, billions of profit, yet they fail to get the cash to give out to investors. Virtue is saying that they're continuously doing well, that the business structure is correct, that their positions are, of course, making a lot of profit, yet we're seeing the opposite in their financials. We're seeing Hindenburg Research going down. Now, again, what we're seeing right now is that shorts are all claiming to be doing well. They're able to show a financial sheet of what they're doing well, but yet they're still struggling. So why is that the case? Well, obviously they have something that's hidden that they're not showing, that's obviously eating into their company. So then think about this. What could it be that they are hiding? That's a massive position that's extremely risky, extremely volatile, extremely toxic, and is causing them a huge loss. And so this is everything that we've been saying, the AMC and GME positions. We've talked about the positions, we talked about the FTDs, we talked about the swaps. We're seeing how the FTDs at Virtue, at Citadel are all increasing. And so when you link everything together, you understand exactly what is happening. And that's why we said, whilst they're claiming and boasting that they're doing well, we've seen how Virtue, we've seen how Doug Sifu has been saying that they've made a fortune on AMC shorts, but it's clearly not reflecting in what they're saying right now with every actions that they're taking. Another thing, like we talked about, and this is understanding how obviously shorts are struggling, reverse repo going down. And this is obviously a clear reflection of why we're seeing the bonds being sold off, because like we said, reverse repo is just an easy access to collaterals. When we're seeing the reverse repo going down, what we are seeing is also the easy access capital for these firms to be going down as well. It's also a showcase of the illiquidity problem in the market. And with illiquidity, it means that you obviously aren't able to get your hand on cash. And that's again, reflecting of what we talked about here of why they need to sell bonds to fund the payout to its owners. When you take a look at some of this, and I want to quickly go on about this in terms of what it is with the manipulation, you guys can see here. offshoring, internalization, and basket swapping. Now you can see that for AMC and GME, this ticks all the boxes. Offshoring, we've shown plenty of proof. Internalization, we've just talked about how, over 70% of the AMC orders were internalized in Citadel. Basket swapping, again, we've covered this in a few videos just last week. And this is exactly what we are seeing. Payment for order flow as well, if you want to take a look at that, we know that Citadel and Robinhood. And so this is how they're obviously doing this. And these are all reasons to let us understand why we are actually winning against the shorts. Anyway, guys, thanks for watching the video. I'll catch you guys next time.